This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Plus has delivered about 3/4 of the extra oil output it targeted since the group started production hikes in April, and the level may fall closer to half later in the year as producers hit capacity limits, sources and analysts said and data showed. OPEC Plus has been pumping almost 500,000 barrels per day below its targets. The shortfall, equal to 0.5% of global demand, has defied market expectations of a supply glut and supported oil prices. 8 members of OPEC Plus that introduced voluntary oil output cuts in April 2023 to support the market began raising output this April. OPEC Plus total reductions, voluntary and for the whole group, amounted at their peak to 5.85 million barrels of oil per day in 3 different layers.
Oil prices rose on Friday as Ukraine's drone attacks on Russia's energy infrastructure cut the country's fuel exports. Brent futures settled at $70.13 a barrel, up 71 cents, or 1.02%. U.S. West Texas Intermediate crude finished at $65.72 a barrel, gaining 74 cents, or 1.14%. Both benchmarks are set to register their biggest increases since mid-June. Russia will introduce a partial ban on diesel exports until the end of the year and extend an existing ban on gasoline exports, Deputy Prime Minister Alexander Novak said on Thursday.
Moving on to the top news in the energy sector.
Russia is set to introduce a partial ban on diesel exports until the end of the year to tackle shortages following a spate of Ukrainian drone attacks on Russian refineries, but traders said they expected the measure to have little impact on fuel flows. Russia's restrictions will only be applied to exporters who do not produce the fuel and whose share of exports is small. Around 3/4 of diesel exports are shipped by producers via the North and South pipelines which lead, respectively, to Baltic and Black Sea ports. Those volumes will not be limited.
Serbia has ample crude oil and fuel in storage to meet demand in the short term, but U.S. sanctions set to come into force on October 1 cast a shadow over the landlocked Balkan nation's future energy security, sources told Reuters on Friday. Russian-owned oil company NIS said earlier it had secured adequate crude and fuel stocks after Serbian President Aleksandar Vučić confirmed that the U.S. would not extend further a waiver for sanctions first announced in January. NIS did not disclose inventory levels or how long supplies would last. 4 sources familiar with the matter said the refinery could operate for 2 months and provide refined products to cover demand for slightly longer. Next, we have the top news in metal markets. Copper prices fell on Friday as this week's rally, driven by supply concerns following an accident at the world's second-largest mine, impacted demand. Benchmark 3-month copper on the London Metal Exchange was down 0.7% at $10,189.50 a metric ton as of 1600 GMT. The metal is still up 2% this week and heading for its best week since June after hitting a 15-month high of $10,485 a ton on Thursday, as analysts lowered supply forecasts for 2025 and 2026 following disruption at the Grasberg mine in Indonesia.
The European Commission plans to impose tariffs of 25% to 50% on Chinese steel and related products in the next few weeks, German business daily Handelsblatt reported, citing senior officials in Brussels. The European Commission had no immediate comment on the Handelsblatt report, which was published late on Thursday. China's Ministry of Commerce did not immediately respond to a request for comment about the potential tariffs. The Commission's President Ursula von der Leyen said earlier this month it would propose a new method to curb steel imports, as global overcapacity was straining margins and making it harder for Europe's steel industry to invest in decarbonization.
We will now look at the top news in the agricultural sector.
Chicago Board of Trade soybean futures finished slightly higher on Friday but posted a second weekly loss after China made large purchases of Argentine cargoes this week, snubbing U.S. supplies. Wheat and corn futures closed lower. Soybeans came under pressure this week from China's lack of demand for the U.S. crop due to tit-for-tat tariffs in the trade war between Beijing and Washington. US soybean farmers have been shut out of China, their top export market, during this harvest season as Beijing's retaliatory tariffs have made the crops prohibitively expensive for Chinese buyers.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.